Good morning, good afternoon, good evening, based on where you are. Welcome back to another episode of the weekly market update with Irfan Khan and your main man, Joseph DiVirgilio.
Amen. Yes, what investors must know this week. And yeah, I'm Joseph DiVirgilio. I'm a hedge fund manager with over 25 years of Wall Street experience running long short equity funds. Irfan, all to you.
Yeah, I'm your partner in crime and an investor as well. Yeah, both moved by a solid interest in financial markets.
That's for sure. And trying to teach people all about it. That's definitely my calling, especially when you see that the younger generation is not really so finance adverse; they're more artsy. But nevertheless, I mean, so for the new ones who have just tuned in, don't know what we do on this channel, we make a recap of what the stock markets have done the week before, try to envision what's going to happen next week, and discuss the geopolitical issues that may affect our finances. But we usually, before we get to all that, we also have stock of the week that we like. But before we get all that, we usually start with the statistic of the week, which has been very well received. And which one is that this week, Irfan?
Yeah, this is one of the main ones, I would say, one that I always keep, close to my heart. And that's why investing long term is something that really pays off. So the 0% probability. Historically, the probability of losing money in the S&P 500 over any rolling 20-year period is zero.
Correct. And that's
0%.
why it's so important. Usually we need to give an explanation to our statistic of the week and explain why why a statistic is the way it is. Here, there's just nothing to explain. Just put your money in the stock market and let it run for the period of time that you don't need that money. And again, this statistic says 20 years, you got 0% chance of losing your money. So when you have a long-term objective or time horizon, that is when it pays off. It was very funny because I was actually reading a piece of research just earlier this morning when I woke up, which calculated since 1990 until 2020, end of 2025, an individual who bought stocks at the peak of the stock market all the time, versus a person who bought stocks but waiting for at least a 10% correction before buying, and then a person who didn't invest in the stock market at all because he's always waiting for the right time, he never does it. And what's funny is that the person who actually picked the index at the all-time highs, say this person added money every single time at all-time highs, this person did better than the person who waited for a 10% correction. And this is true, because when you buy at all-time high, say you systematically buy every couple of months, 3 months, every 6 months, whatever, you just keep, dollar cost averaging. But for some unlucky reason, you buy at the peak every time. The peak of the market, it's always followed by more peaks. So in a healthy market, you constantly see new highs, new record highs. While the person who actually is waiting for a 10% downturn or correction is missing the entire upside. And when that 10% arrives, 10% drop arrives, that person is buying still higher than the person who had added, at every peak. So it's just an interesting research. It was interesting. But anyways,
it goes to show there's no point in overcomplicating things.
Because
dollar cost average, put in a certain amount every month, then.
But because if you're buying, if you're waiting for a 10% drop before you add to your positions, or you buy the stock market, it's your market timing, right? So, and it's a form of market timing, and it's the same holds true for the person who involuntarily buys at the record highs all the time. It's the result of timing, but even though it's involuntary. Anyways, it's an interesting piece of research that says that doesn't at this point it really doesn't make sense to try and time the market. Just buy and hold, you know. So
Yeah.
to give a little bit of recap of what happened last week, equity markets finished on a highly volatile holiday shortened trading. What did I read here? I wrote my notes and I'm freaking out. So equity markets finished a highly volatile holiday shortened trading week, broadly higher. Powered by a massive early week surge in tech shares and deflating oil prices. U.S. markets were closed on Friday because of Juneteenth. Between Monday and Thursday, the Nasdaq returned 3.1%, S&P 500 did 1.4%, and the Dow Jones Industrial Average plus 0.7%. So what brought the markets up? This USAR peace deal, and there's a lot of people that misunderstand what's really going on. This is an MOU. It's a memorandum of understanding that they're working towards something which it seems extremely fragile as Israel continues to bomb Lebanon and Iran needs that. Actually, it seems like it was part of one of the points, or the first point on the MOU that the United States drafted along with Iran. And the first
And it seems to be a pretty fragile state right now.
yeah, well, because they just stopped. They closed the Strait of Hormuz again just the night before last night. Because Israel continues to bomb southern Lebanon, and but JD Vance finally arrived in Switzerland. That flight was canceled when Iran said we're going to close the strait again, but apparently he's in Switzerland. He was supposed to go to Lausanne, but now or Lucerne, one of the two, I forgot which one. And then now he's in Zurich, but whatever, I don't know what the dynamics are there.
Or Geneva, I don't remember, but somewhere in Switzerland.
Yeah, but apparently it seems for now that the strait is only open to Iranian ships. I don't know. I am not even going to try and understand this anymore, but the truth of the matter is it's extremely confusing for markets. The thing is no longer sustainable. So I think everybody understands. Well, both parties understand that. The only one that doesn't is Israel. They don't give a shit about what they're doing, and that's breaks my heart. But anyways, Kevin Warsh kept interest rates steady at 3.5 to 3.7%, but delivered a significantly hawkish message. So it seems like now about there's a 80% chance of a rate hike by end of the year.
That's not going to make Trump happy.
No, that's interesting because he now all of a sudden he's okay with somebody else raising rates while he was pressuring Jerome Powell to cut rates. Go figure. So there was a historic IPO. That's SpaceX following its massive debut. SpaceX initially surged nearly 20% early in a week, pushing its valuation past 2.6 trillion. However, it fell 6% on Thursday, giving back a large portion of its post-IPO market gains as investors' profit-taking set in. Now, this is so overly valuated that I expect this stock to continue coming down to more reasonable valuations because the company is losing money in the end. So, give it.
Didn't it lose 600 billion valuation the other day? 6% was 600 billion, right? Something like that.
Well, the float is 5% of all shares available.
Okay. Wow.
So $2.6 trillion valuation. That doesn't take much for a stock to lose half a trillion. In this case, of market cap. You have a stock like that down, $5, $10, $20. I'm assuming that can happen. Hotter than macro data, May retail sales came in much stronger than expected, up 0.9%. However, the consumer price index, or the CPI, accelerated to a hot 4.2% year over year. This dual reading points to highly resilient consumer demand, but reinforces the Fed's higher for longer rates thesis. So I want to discuss a little bit what's going on with the U.S.-Iran peace deal. Again, this is a MOU, a memorandum of understanding. There's confusion. I don't really understand what is really happening, except for the fact that the United States is trying to salvage this deal, which more of is a surrender from the U.S. So my view, because they have not achieved anything that they had set for this, as goals for this war. They didn't get regime change. The Strait of Hormuz gets opened like it was before the war. And they're giving, the MOU gives over $300 billion to Iran. And then I think there's another 27 billion of frozen assets, Iran's frozen assets. So they were, Trump was blaming Obama when he did his deal with Iran in 2015, I think it was, or 14, where the U.S. gave unfrozen Iranian assets equaling to $1.7 billion back to Iran. And here we're talking about 300 billion plus 27 billion. I mean, you tell me, how is this good for the United States? There's nothing.
Actually, is it 300 million just as a grant? Or
300 billion. 300 billion. It's a reconstruction fund, 300 billion, which Trump says is going to be funded by the allies in the Gulf. But I find that hard to believe. And at the same time,
but is it like, isn't it like a loan? I thought I'd read it was something which was kind of.
Look, I don't know if it's a loan or not, but in the end, everything that Trump says somebody else is going to pay for, America ends up paying for. Okay, the wall was going to be paid by Mexico, ends up not being paid by Mexico, and whatever that small portion that was built to the American people, and everything else that he's doing. You know, the destruction of the East Wing for his fucking ballroom or whatever the hell. Anyways, so the other thing is what's interesting to me is the fact that we have. Iran oil sanctions are lifted. That's one of the points will be lifted. One of the points of the MOU, which this could level out, would level out a little bit of the price of oil in a sense that because there's been so much destruction in the Gulf in the last 3 or 4 months, a lot of these energy infrastructure are offline. It will take months, if not years, of energy.
I remember that some infrastructure in Qatar will actually take 5 years.
Qatar, Kuwait, UAE, and all these other countries that basically had refineries and oil sites. They've been damaged, so now it takes months or years, like I was saying. But allowing Iran, so by lifting sanctions off of Iran oil, that might help keep the price of oil down, because with the damage currently assessed, oil should be trading between $90 and $95 a barrel, or some say 85 to 90. But okay, let's say 90 is the average. With Iran's oil back on the market, that number needs to be revised, and I'm thinking more like 72, 73, 70, maybe $75 a barrel. So that
we would all be happy about that.
Yeah, yeah. Let's see what happens. But so we talked about Kevin Warsh, and that the market expects 80% rate hike in September. Actually, I wrote towards the end of the year, but now this is September. Stock of the week: U.S. Rare Earth Inc. The ticker is USAR. Now, everybody, our listeners, our viewers, this is not investment advice. Absolutely not. We are discussing mine and your fund's portfolio, what we like when we invest, and what we're doing with our money. You need to seek financial advice if you ever decide that you want to, buy something that we're talking about. You need to talk to your financial advisor first. This is not investment advice. This is our portfolio, and we discuss what we like. Somebody had a comment last week about some of the companies that I suggest that they may be a bit speculative. They might be a bit speculative for you, but not for me, because I design my portfolio with a bit more of. I want a higher beta. I want a bit higher returns. Companies that are growing. So they might be more volatile, but that doesn't mean they're more riskier, or they are riskier than.
Perfect example of when we say this is not investment advice, because we could not possibly know what makes sense for you.
Exactly. So U.S. Rare Earth has quickly become a global leader in the supply of critical minerals and advanced materials, and the partner of choice in producing rare earth elements, oxide metals, and magnets. The U.S. government is investing $1.6 billion in the company. I like what I see. I did a dive into their financials. They're still losing money, but the fact that the U.S. government is supporting the company, that gives me great hope. And so I bought a little bit of that just about last week. I bought some USAR. Now, again, I'll explain this again. Do not buy the stock unless you talk to your financial advisor first. Last thing I want to say is that this is our last episode for June until, say, middle of July or the first or second week of July, as I am traveling for business, and I will be largely, so I will not be able to do this segment while I'm abroad. I'm traveling a bit everywhere between the United States and Asia. I'm assuming we'll see each other again sometime at the beginning of July. So that's probably the first or second Sunday of July.
Yeah, and sorry if we missed last week.
That's also true.
We had a few issues, unfortunately,
Yeah.
but obviously, by no means you should think that we are not committed to this, because
No,
obviously
we're
we have
really
been
stressed
doing
out.
this on a weekly basis since late last year. And so definitely, we want to maintain the pace. There might be some times, as we had last week and as we're going to have in the next couple of weeks, that we won't be able to be on it. But we'll
Listen,
continue.
when one of us says, Joe, I'm unable to do it Sunday because I have a problem, we always worry that, when can we record it next? Then, it's just for us, it's stressful not to do this. So rest assured that when we cannot do it, it's not easy for us either. That's all. I'm not sure how difficult it is for you not to see our ugly faces. And just letting you know.
Yeah, I'm not expecting our audience necessarily to come crying and say, "No, where is that episode? I'm not missing it." Well, if once that happens, our life is complete.
We're nowhere close to being as popular as the Game of Thrones or anything like that. So, or Harry Potter, for that matter. So anyway, this is our episode for this week. We'll see each other at the beginning of July. We beg you, we love for you to subscribe, share, comment, and like the video of the channel. That helps us a lot. We've seen incremental growth, and we would love to continue seeing that growth. And feel free to suggest whatever you would like us to discuss, because we look forward to seeing the comments and either replying to your comments or implementing some of the changes that you.
Yeah, and this cannot be overstated. I mean, we come up to the episode, with our own content and things we think are things which are worth sharing with you. But we're doing this, to sort of serve in a way your needs and what you would like to hear about as well. So obviously, it goes without saying, you please do come and tell us what you would like us to cover in more detail.
Exactly.
And besides the content that we always deliver, we'd be very happy to include an extra part where we actively discuss what you have asked us.
Yeah, of course. I leave you with people should expect volatility this week, because there's a lot still not clear and well understood about this MOU and the peace talks process. So expect volatility this week and the next, but always stay the course and don't ever panic. Don't ever panic. And that's the end of it. We'll see each other in a couple of weeks.
Yep. Great. Take care, everyone. Bye.
Bye-bye. Bye.